Hi, 17th September 2021 today. Going to touch on Zillow, like what I mentioned. Well, there's a company and price analysis on Zillow where people will ask, is it a bargain or is it a risk to enter Zillow right now? Just some quick introduction on Zillow. Well, it IPO at 20 USD back in 2011 and the highest price I think so far is 212 USD and current price is around 93.6 USD. Year to date performance is actually not good for US equities like Zillow because well when Nasdaq 100 is going higher and higher from 13,000 all the way up to around 15,000 300 points 400 points right now, Zillow is actually down 31%. Nevertheless, we look at the business proposition of Zillow to make a call on whether is this a counter that is worth considering as one part of our portfolio going forward. So what is Zillow? Zillow positions itself as an online real estate marketplace where one can buy, sell, rent houses, get an agent, or obtain financing for one's home. If it doesn't reconcile with your thoughts, it's like property guru, or is it like oh my home? Well, then again, it's a lot more than that because its current market cap right now is 20 plus billion USD, and I'll go and touch on the financials later. But you can see that well, agents or real estate agencies, partner firms can actually get technological support and marketing support, etc. from Zillow. So is it an online real estate player and it's going to be changing the landscape in US? Well, we shall see. So some important statistics for people to look at. When you look at online platform, you will look at the monthly unique users. So Q2 they reported that it's 229 million unique users, and its Q2 revenue is 1.3 billion USD. That's a very big number. And even you go to look at the statistics, it's 2.8 billion visits then, and with more than 135 million homes in living database. Wow, 6,400 employees. Isn't it a big organization? On the right, you will see the key statistics like what's the gross profit, what's the gap net income, etc. and etc. So this is a page on the income statement, which I'm only showing all the way to income from operations. So look at three key business segments for its revenue: homes, IMT, which is internet media and technology, and the last mortgages. So undoubtedly the homes actually created the biggest kind of the revenue for Zillow in 3 months, June 2021, and IMT is the second biggest component, 476 million, and mortgages itself is still growing. They're growing their pie from 33.6 33.7 million number to 56.7 million figure. In summary, what's their goal and objective? They want to make real estate transaction experience as simple as possible, where on a single platform people can buy, sell home, rent home, get financing, or if they need, the real estate agents are there as partner of Zillow, where they can get their help if they need. If not, they can just buy, sell home directly on Zillow platform. The good thing is the company ended 2Q with very strong cash position with $4.6 billion, and recently on 3rd August they actually did a securitizations of 450 million of inventory so that they can take in more cash capital to finance their home acquisition strategy, which is they're going to build out their inventory, where their inventory will be there for them to actually sell to potential buyers who are using the platform. Remember the key number that I mentioned earlier: how many unique users are on your platform per month. But as always, there's a risk of securitization, which I'm going to touch on later. Yeah, look at the financing figures right here, and well, you look at the net cash provided by financing activities. In 1/2 2021, wow, isn't it nice? They have close to $1 billion of financing inflows. But you will see carefully, over 600 million comes from credit facilities and 544 million comes from the issuance of Class C capital stock, which is issuance of shares. And even for 1/2 2020, they are issuing Class C shares again. So in total, over these two periods, they actually issue 1 billion equity. What is that for? Is it to grow their inventory? So look at the inventory figure. Well, inventory figure as of 31st December 2020, where I circled out, you see that, well, inventory growth from close to 500 million to June 30, 2021 figure of 1.2 billion, which is up by $700 million. Inventories are growing big. Is this a good or wrong strategy? That requires a call of the home market situation going forward. Well, this is clearly a very optimistic view taken by Zillow on the future real estate outlook in the 1 to 2 years, because they will take time to actually offload the inventory. And you actually see I boxed out the securitization box below. There's risk, because what are the terms of the securitization? In the event they cannot sell, does the lenders to Zillow who actually securitize the asset have the right to push back the asset back to Zillow? This is something that I have not investigated. Interested party would most likely be required to look into this area very carefully, because inventory is something that I'm not very comfortable at. Of course, they have 4.6 billion cash right now, but you also have to watch out for the debt, because you have to continue to unroll the debt. And if they can't unroll their debt in the event interest rate hike and interest rate conditions in such a way that tightens so quickly that cash flow isn't that liquid, then that's the issue. So you look at the share price chart. Two key points that I always like to mention. One is 90, and this is another point, 110 USD. And last night is trading at 93.6 USD. 5-year performance wise is up 167%. The question then is, will it drop back to below 90 and head back to around 90 in the event of broad market winners? Because there's always been people talking about September weakness in the market is seasonal, and equities market normally don't do that well. This is something that I'm not so sure. Will there be a broad market winners so powerful that it can bring down Zillow price to below 90? That's uncertain. But what I know for sure is that I would not acquire Zillow at 93.6 USD. Well, this is a year-to-date performance. Like what I mentioned, is coming down to all the way from 136 from the beginning of this year to current price. Well, it's not a super love or hated stocks. Zillow is actually caught in the middle, and its price target is, wow, it's very wide, 100 USD all the way to 200 USD. So is it a sign of art to value a company? For Zillow itself, the price before that have taken all the way to above $200, like what I mentioned in the price chart, even at the beginning of the slide. So what's your take and what's my take? Well, just to sum up the thoughts, I will be on the sideline to see if price dip will bring it down to below 60 USD, because I'm not comfortable with the growing inventory, as they are betting on the housing market to earn a spread from the buying and selling, because they earn a spread from the cost of the inventory, and when they offload to the buyer, they earn a spread. And the securitization itself, like what I mentioned earlier, may free up some capital, but will there be a cost in the event the inventory fails to be offloaded and the investors in the inventory through the securitization program cannot get repaid? What would they do? You need to look at the terms. Though there isn't any immediate cash crunch, but they have been issuing shares. This is not a positive sign, because if you keep on issuing shares, of course you lock in higher and higher prices, that's good. But you also show a dilution in the company in terms of earnings ability, because if earning does not catch up with the pace of share growth, that will impact on share price. As always, this should not be construed as any investment or trading advice, because this documents my current thoughts of Zillow at this point in time with the current data that I'm looking at. Thank you.